Ladies and gentlemen, we have some new massive news that is coming out of China. Because what you have to know is China has been the manufacturer of the world. What companies have been able to do is continue to offshore their manufacturing and their industry to keep costs low and profit margins high. This is what we call globalization of the supply chains. But now we're starting to deglobalize. Companies are leaving China in droves and their industry is starting to collapse. So everyone, what exactly new information and what exactly new data did we get? Well, that's exactly what I'm going to go over in today's video, and you all need to pay very close attention to this, because if China's economy goes down, we're going to feel it around the rest of the world, because they have been the ones that have been fueling this global boom. Okay? Let's get into it. Look at this, everyone. China's industry profits tumble 18% as demand sputters. So this isn't just a small miss, everybody. This is an absolute massive miss. Their profits are tumbling because companies like Apple, etc., they're looking for other alternatives like India and China to start doing their manufacturing with all the instability and the geopolitical risks that China now faces. So profits of China's industrial firms slumped in the first 4 months of 2023 as companies continue to struggle with margin pressures and soft demand amid faltering economic recovery. Well, what's going on, everyone? I thought China was rebounding. I thought their economy was booming. Well, people, we all know China likes to manipulate the numbers, but when these economists do some real digging, some real research, they found out that the economic growth is much smaller than they're reporting. But listen to this, it gets even worse, people. Profits fell 20.6% in January to April from a year earlier, compared with 21.4% decline in the first 3 months. But what exactly does this mean? Well, overall, today's data shows that industrial enterprises, especially private equity and owned enterprises, continue to be affected by a combination of unfavorable factors such as base effect, short-term pressure on economic recovery, and the downward trend of PPI producer prices, said Bruce Pang, chief economist at Jones Lang LaSalle. Oh, and look at this, what just popped up. Nvidia on track to hit 1 trillion market cap when market opens. Again, people, like I've been talking about, this is breaking news. I'll just quickly commentate this while I'm doing this video. I think Nvidia overhyped their stock. They're saying all the AI buzzwords, and it's going to correct very soon. But let's get back on track. So there's 2 key issues right now. There's pressure on their short-term recovery, which I think China is not going to have a big booming recovery like everyone is expecting. And also as demands continue to fall, and once we enter an official recession, like they're saying, producer prices are going to keep plummeting. Chinese companies are struggling with both weak demand at home and softening demand in the country's major export markets. Producer deflation deepened in April, with producer price index PPI falling at the fastest clip since May 2020. So this is a very good forward-looking indicator, everyone. They're saying demand is not only falling in China, but to all their major exports. And they're saying for now, producer prices are actually falling, and they're saying it's going to cause deflation. Now, I don't think we're going to have deflation yet. That will come when we have a Great Depression. We still have very sticky inflation that's going to stick around for a long time. Now, again, the reason why we have to look at this, because this is a forward-looking indicator. All these companies like Nvidia that are reporting earnings, saying that their earnings are going to skyrocket at the end of the year and also in 2024. But according to producers, there's much less demand, but it'll take months until we get that data and see that show up in retail sales and these companies' earnings. Lenovo, the world's largest PC maker, said this week the quarterly revenue and profit tanked in January to March, and it had to cut 8 to 9% of its workforce to reduce costs as global demand for personal computers, PCs, continue to slump. So this is something else we've been talking about, everybody. Unemployment for youth in China has just hit a record high. We're seeing mass layoffs at these big corporations, for example, like Lenovo, and this is going to continue. And think about this, if more and more people start to lose their jobs, do you think there's going to be demand then? No. And if we're already having weak demand now, imagine how bad it's going to be when the unemployment rate finally starts to tick up, or should I say the official unemployment rate, because the real unemployment rate is much higher. But this is now starting to spread like wildfire to other industries. So producers of steel and other industrial metals are also hurting. Prices for steel reinforcing bars used in construction hit the lowest level in 3 years this week, and only a third of the country's mills are currently operating at a profit, according to consultancy MySteel. Wow, everyone, unfortunately, this is just another blow for the construction sector. They've faced skyrocketing commodity prices. They've had to go and build these homes at a loss. Then they've gone and brought these materials, and now these material prices are plummeting. This is going to have a big effect on the construction industry, and we're seeing building approvals for new homes is hitting decade lows. There are still some pressures felt in May due to the difference between the purchases and sales prices, with steel prices falling in the month because of slower than expected demand recovery. And foreign firms are feeling the pain as well. Foreign firms saw their profits slide 16.2% in January to April from a year earlier, while the private sector firms recorded a 22.5% plunge according to a breakdown of the data. Profits sagged for 27 of the 41 major industrial sectors during a period with ferocious metal smelting and rolling processing industry reporting the biggest slump at 99.4%. Did you hear that, everybody? Down 99.4%. These industries are facing huge issues, and it's going to have massive domino effects. In the next stage, China will focus on restoring and expanding demand, further improve the level of production and marketing, and boost business confidence. But the question is, will it be enough? The grim profit readings came after a batch of April economic indicators spanning industrial output, retail sales, and property investment suggested that a recovery in the world's second largest economy is losing momentum. That's exactly right, everyone, and that's what I've been trying to warn you about. They've all been saying that the housing market crash in China is over, they've fixed all the issues. No, the housing market crash is still going on, but they're trying to cover up all these reports. They're buying out all these mainstream medias in the West to try to censor this information. But in real terms, on the ground, reports are saying the housing market is in big trouble, and we're seeing more and more defaults. So what exactly are the economists predicting that China's growth will be? Nonetheless, some investment banks have recently lowered their 2023 China growth forecasts after the April data disappointment, with Nomura ratcheting down its predictions to 5.5% from 9.9% previously, and Barclays revising its view down to 5.3% from 5.6%. But people, I think their real growth is going to be much lower than this, because again, you cannot trust the numbers that are coming out in China. Their real GDP growth is much smaller, and what we're seeing is a new trend is they'll put out these great economic data figures, and then they'll revise them down very quietly and silently the next few months. So I know what you may be thinking, well, that's just China, it won't affect me. What does this mean for you in simple terms? Well, everyone, this will affect you, because pretty much everything you buy, most of it's made in China. And if companies continue to leave China in droves like they are, they're going to have to look for more expensive alternatives to make those goods, and that's going to mean inflation is going to stay much higher for much longer. And why this will affect you is because then that means interest rates on your car loans, your credit cards, your mortgages are going to keep going up. And not to mention, if China becomes more poorer, well, then they're going to invest less and less in these other countries like the United States, Australia, Europe, etc. as well. And that will be lower growth for them, which will lead to more layoffs and make this economic downturn worse. But everyone, I fear this is just the calm before the storm, because we're seeing every single month the relationship between China and the US gets worse and worse. They're getting closer and closer ties with the BRICS nations, with Russia, example, and I'm very worried we're going to enter into a global conflict, or at least a Cold War with China, which is going to have massive consequences for the economy. But everyone, what do you think about this? Let me know down below. Now, for my loyal viewers and subscribers for watching, you're awesome. Thanks for watching. I'll see you all in the next video.